Senator Smith.
Thank you, Mr. Chair. Good morning, Mr. Warsh. It's still morning. Let me start with this. I think you have said that you have confidence that this economy has potential. I think that's fair to say. And you've also said that this is a time of great consequence for the nation's economy, perhaps one of the most significant hinge points in a couple of generations. That's fair to say?
Yes, Senator.
Thank you. And so I agree with that. And I actually want to go a bit further because I think that it seems to me that this economy is amazing for rich people, people who have a lot of capital. And in fact, we can see in 2025, billionaire wealth grew 3 times faster than the average rate of the previous 5 years. And wealthy households hold a massive portion of the nation's wealth. And this, I think, is the tipping point that our economy actually faces right now. And I can tell you that in Minnesota, a lot of people are telling me that it is harder and harder for them to afford the basics. They aren't rich. They don't have enough money to pay their bills, to pay their doctor's bills. So I want to look at this with you for a few minutes, and I want to start with inflation. So last week, President Trump said that gas prices are, quote, not very high, and, quote, we're having some fake inflation because of the fuel. So understanding what you've been saying about data and measurement and all of that, let me just ask you, do you think that gas prices going up 20% is fake inflation?
Senator, the gas prices like beef prices, eggs, milk, and the rest, they move, and when they move in the wrong direction, the American people are hurting by it. There's no question about it. That's
right. American people feel it. It's not fake to them. It's money that they don't have in their pocket because gas is up 20%. I think my constituents would say that inflation is real and not fake. Okay, so let's look at unemployment. At the State of the Union, the president said, quote, the roaring economy, this is the quote, the roaring economy is roaring like never before. So do you agree with that statement? Is that how you see the economy, that is roaring like never roaring before?
So Senator, if I can clarify 2 things. One, there's a difference between the change in prices and inflation. The change in prices happen in a market economy. When inflation moves up, that's because the Fed had something to do with it. Now, on the state of the economy, I would say that the broad contours of the economy are improving. The potential of the economy, the real results of the economy are improving, but I think it can improve more, and I think in the years ahead, I think the economy's potential is strengthening.
So, the reality is that the economic data, understanding what you're saying about economic data being not imperfect, that there was almost 0 job growth in 2025. And so that looks to me like not a roaring economy. It looks like a weak economy, which is what my constituents are telling me back in Minnesota. Let me go to one last look at this. Around the country, the average cost of home insurance rose 12% last year. Now, in my home state of Minnesota, not a coastal state, premiums rose 34% in 2025. This is, of course, caused by extreme weather events, hail, floods, tornadoes, hurricanes, climate change. So is that inflationary in your perspective? Is that increase in home insurance, property and casualty insurance, isn't that inflation?
So, Senator, if I can answer 2 questions that I think I heard, and we talked about both of these in your office. When we look at the payroll numbers every month and we ask ourselves whether it's good or bad, the job you gave to the Federal Reserve is to ensure we're at maximum sustainable employment. I think broadly speaking, the economy is running about close to full employment, though we never know what the right number is. So if Americans that want a job can find a job, then by the Fed's metric, we're at full employment. On the question of insurance premiums and the rest, when I look broadly across the economy, I would say when we look at health care, when we look at education, we look at housing, those prices have tended to go up more. In the less regulated parts of the economy, we've seen a downward structure, a downward change in prices, and we try to aggregate them the best we can.
But I'm not exactly sure what your point is there, but I would just say that my point here is that rising home insurance rates caused by increasing extreme weather events, climate change, is another inflationary pressure that people in my state are dealing with. And this, of course, the reason I'm focusing on this is because I'm worried that because of the pressure that you are going to be under from the president to lower interest rates, that this inflationary pressure that my constituents are feeling is going to get worse and not better. And so I don't have time to ask my last question, but it is literally this. The president has said that he demands that the next Fed chair will lower interest rates. And I take him at his word at that, and that is what causes me such grave concern here. Thank you, Mr. Chair.